TLT stock and TMF stock have eased off of recent lows. Is it time? Is it safe to get back into the water? I've been getting a lot of queries, individuals leaving messages on my website and other places asking that question. Do I think it's okay to get in? Are we going to see a turnaround? My short term thinking is, yeah, we might see a pop upward, but that would be a good time to go ahead and reload because ultimately I see TLT stock and TMF stock moving lower considerably. We're nowhere near where we need to be for these stocks to start rallying. TLT stock sitting where it is right now, considering the inflation data we just got this week and the jobs data we just got last week, when you start combining these, you see that the economy is still performing very robustly. That is not the way to get to 2% target inflation rate anytime soon. Given that, interest rates will remain higher for longer and may go even higher. This would push TLT stock lower and TMF stock much lower as well. Let's jump in and I'll show you what I'm looking at for these two stocks. Before we jump in, I have broken out this type of content out of my initial channel. Cannabis Investing Newsletter is now called Cannabis Stocks Analysis. This is stock market and stock options analysis. So if this is the kind of content you're looking for, I cover the broader stock market and some of the things that will affect the stock market broadly speaking. Like and follow down below. Thanks so much for following along. Also, there are links below. I've shifted the name of my website. dhtayloranalysis.com is the new website name. I put out a daily email every time I put up content. You can sign it. It's a free email. It keeps you in touch with what's going on with the content at the 3 channels that I have. Links for the other 2 channels are down below, plus a link to the website. Finally, I am shifting everything with my website and putting out written content for all these videos. You'll find that on my website as well. Make sure you hit those link buttons. And so here we are looking at CPI headline inflation and CPI core inflation. Headline inflation, of course, is exactly that, the top line inflation. They strip out volatile things such as food and energy for core inflation to kind of give us an idea as to other things. Food and energy tends to be really volatile. But when you strip that out, here's my kind of take on that. Does that mean I no longer eat or drive a vehicle or heat a house? Which, when I look at core from that perspective, that's how I look at it. There's a lot of individuals who can come up with a lot of different things when it comes to inflation numbers and how it's measured. They are entirely unrealistic at the end of the day. But the Federal Reserve follows them. Therefore, the Federal Reserve has to act accordingly. Headline inflation has popped up a little bit more. Core inflation on a month-over-month basis moved up somewhat as well. A little more than expected, but year over year, which we're looking at the year over year charts on these, it's still moving downward. But if that even ticks up once in a monthly period, which with the headline numbers moving higher, it's only a matter of when the core will start to trickle higher. This is kind of what I'm looking at when I say we're not there yet. You kind of have to understand how we got here, all right, with COVID. Of course, the supply chain just broke down into pieces. And then Americans got a whole bunch of free money from the government and then spent that money on goods and services during a very broken supply chain. This ultimately would contribute to higher inflation. The other thing is the Federal Reserve lowered interest rates all the way down to near zero while simultaneously turning on the printing presses and pumping money into the system. We're paying the price for that. Interest rates need to move back upward and the money supply needs to contract. Unfortunately, those forces, there's some negativity to that. As interest rates move higher, money from around the world is rushing into the United States to catch hold of that higher interest rate differential. They're not getting the same interest rates in other countries, so why would you invest there when you can invest in the United States, which has such great interest rates comparatively? Then, because money's coming in, the money supply is not shrinking. The only recipe for fixing that is higher interest rates, which would draw in more money. So you have all the expenditures with the broken supply chain that really pushed up interest rates or inflation. Then the initial thing, of course, was the money supply and interest rates for the U.S. economy. Those low interest rates, of course, drove the housing market through the roof simply because you were silly not to buy a house if you could. Some of those people are going to be sitting in those houses with those mortgages for the next 30 years because they're never going to see mortgage rates so low. That pushed price higher. Core inflation has housing inside it. So does CPI headline as well. But this is one of the things that really pushed inflation higher. So you have all these factors of the broken supply chain and Americans shopping their brains out because they were stuck at home and had nothing better to do. You also have a money supply that was flooding with interest rates that were on the floor. And of course, then there's the war in Ukraine, which dislocated certain supply chain aspects as well. So we have a lot of outlying factors. The Federal Reserve is trying to shift things back. I do not, and I have said this over and over again, do not believe they hit the magic number for interest rates to get inflation down to 2% in a nice, steady way. They're going to have to go higher. Maybe not much higher. We'll see. We're data dependent. We don't have that information. But I do believe, yes, we see higher interest rates, which means that the interest rates will remain higher and possibly go even higher and remain there for longer. Markets didn't like that information. Here's another aspect I want to kind of look at, and this is personal income versus personal expenditures. 70% of the economy is consumer services driven. If you follow the rate of growth for incomes in the United States, and as you can see by this chart, you can see the rate of growth of expenditures in the United States, that there is a very high correlation. As more and more people get on the payrolls, personal incomes, the aggregate expands. As people get raises because they're on strike and forcing employers to spend more money on them, aggregate personal incomes expand. So we're seeing all this happening in the news almost every day. Personal incomes will expand, which will drive personal expenditures, which drives inflation. So the Federal Reserve has a few headaches to deal with. There's more to come, is basically what I'm saying. And if you look, the blue line here, you can see personal incomes are starting to inch back up more and more. They were a bit chaotic when it came to, of course, the flooding of the market with stimulus checks. You can see the big spikes up and down and how that affected everything. TLT stock. This is actually TLT stock itself. Yesterday's inflation data points, the market didn't like it, sold it off. This morning, throughout the night, there was a bigger move upward, and then we kind of went sideways all day today. Stock market ended up a little bit lower. But here's a bigger look, the big picture for, this is TLT stock, not TMF stock, but they basically run hand in hand. Generally speaking, I think we're probably going to be kind of range bound for a bit. Any kind of movements lower might be a chance to buy on a dip, but don't hold for very long. I will be trading options because there's a time factor involved, maybe a slight lottery ticket aspect to it. There's a few things going on there. I do not want to own outright TLT stock or TMF stock because that chart could easily go down very quickly. But we also have Israel and Hamas, what's going on there. There was a flight to quality on Sunday. Monday was supposed to be a holiday. It is a holiday for the United States, was a holiday for the United States, but it was not for the stock market. It was open. I didn't realize that. I actually thought I had Monday off. Not exactly happy about that. Still, on Friday, I'm still not happy about my weekend last weekend. You could see the pop higher because there was a flight to quality as investors rushed out of stocks into bonds. That pushed up yield. TLT stock, TMF stock followed yield prices higher. Given that, we're working through that, and I don't think we're probably going to see a much bigger war going on there. I think Israel's just going to go in and just blow up as much things as they can, declare victory, and it's a shame. But that's the way things are going over there, but it will likely remain contained. Given that, I don't think we're probably going to see any issues with a need to go flight to quality just yet, but they exist as a risk. I'm looking for TLT stock and TMF stock to continue to sort of stay range bound for a while until we get more information that will push the needle up or down for TLT stock or TMF stock based on future interest rate expectations because of inflation. The proof, or what you should be looking at, how robust is the consumer? How high are interest rates and how much money is flooding in, affecting the M2 money supply? Those two factors are really going to play into what happens with TLT stock and TMF stock. Make sure you hit the like and follow button. Follow the links to dhtayloranalysis.com. Sign up for the free email. I send it out every day. I have content. You can pick and choose from my 3 channels which you want to look at. As well, if you're looking for written analysis on this exact video, it's at my website, dhtayloranalysis.com. Thanks for liking and following. See you in the next video.